Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again in the euro currency. So euro, as you probably know, currently it's really very difficult market for analysis. Not only euro, but Great British pound as well. So because market currently is strongly politicized, and we could provide interesting and detailed analysis from the technical point of view, from analyzing of the statistics, some fundamental events. But this is all by just the technical side. So in any moment, the political factors could intrude and everything could change very fast. That's why personally I'm not feeling very comfortable to provide some view that I know that could be crushed by just some statement by the Brussels or Theresa May or some results in voting in the parliament or something of that sort. From the technical point of view, guys, the recent action definitely looks bearish because market erased Fed statement, has dropped below the trend line and has been broken initially. And market also has broken through confidence support on the intraday chart. So that was really very strong support area. It's also monthly pivot point, guys. From the normal bullish market and bullish price behavior, it should not happen. This market just breaking the resistance and return right back down. This is the sign of the weakness. On the weekly chart, you also could see here, guys, some kind of the shooting star pattern. Also, it reminds the kind of the washing greens of these stops. Stops have been grabbed and market just collapsed. So at the same time, it was not absolute surprise for us because actually, if you remember, on Friday we have planned the bearish pattern because we said we have the engulfing here, that it's even looks better on the dollar index, and the engulfing suggests the deep retracement could be kind of the ABCD pattern lower. And indeed that has happened because market has completed our gut with triple to sell, so I will show you on the follow time from chart a bit later. And this was not some surprise, but what is really surprising is the pace of the dropping. So it's too fast. By later, here bulls still have chances to reestablish trend. But the most strong factor that works against it is the strength of the drop. So it's too fast. So if we would have some gradual retracement here, if even it will be drop deep as it stands right now, it was not as problem as it seems right now. From the bullish standpoint, it's nothing really totally has been broken because take a look, trend stands bullish. Yes, market shows the deep retracement. This is probably 618 support of the most recent swing up, but this is not the problem because when the market forms bullish reversal swing, deep retracement is a normal action. It happens in most cases, 50%, 618% retracement when the market forms reversal swing. This is normal. What is not normal is the speed of the dropping. This collapse is too fast. And that is major warning sign for the bulls. So here, guys, on the common week, we'll be watching for 2 moments. First of all, how bulls will take situation and whether it will be possible for them to turn back on the upward trend. For that purpose, market need to reestablish upward action and return back above this top. Not necessarily on the next week, but in general, this upward action should continue. And that will tell us that the bulls still control the market, and we are correct that it's just a retrace and the market could reestablish upward action. That's the first scenario. Second scenario, if we will see signs of weakness, the market will show the heavy action, choppy and sloppy, upward price retracement, kind of the ABCD action, some bearish continuation signs on the intraday charts. That will tell us that downward action probably will continue, and bulls right now are unable to reestablish the trend and support the trend. And this sell-off is not just a retracement of this rally, but that is just downside continuation. So speaking on the first setup, I mean the bullish context, on the daily we have a kind of the bread and butter setup. So our forum member Vanillin has mentioned correct in our forum, but he takes a look at the 8 hour chart. But I think that on daily we also could use this setup. So if we'll put the moving average, you could see that indeed we have not bad rally up, close below 3x3 and hitting major support area. So we have here the bread and butter setup. The one problem with the bread and butter, this bread and butter, is of course the strength of the trap, as I said. Bread and butter suggests at least 618 retracement here, but also bread and butter from time to time becomes the continuation pattern and just shows that after bread and butter, market just could reestablish our protection. So that is what we have on the bullish side. So on the 4-hour time frame chart, you could take a look at the more details on this subject. So that's our rally. Market has completed A, B, C, D retracement. OP target has been hit. And as I said, it's recent drop just with the one candle down. The CD leg has been completed. This is negative, and this is potentially problem signal for bulls. So this is really worrying sign. But market stands right now at agreement support, and we have got this triple to buy. Now we're back. So that is the subject for your analysis, and that is what you have to decide. So is it enough context for you for trying to take the long position here, trying to trade this, or you just miss it and we'll be watching for some other setup, or you need more clarity, something else. So, but by the latter, by the technical factors, we have the setup in place. So that's potential different patterns that have the same feature. I mean, the bread butter, it's bullish, and we have the Gartle's triple two pattern that's also potentially is bullish, but they have a bit different targets. So bread butter has 618 retracement target, while the triple two pattern suggests at least 30% retracement. On the hourly chart, if you still would decide to trade this, on the hourly chart, you could keep an eye on 2 moments. First of all, our protection could start by minor hand and shoulders pattern. So take a look, that could become left shoulder, head. So maybe market will form right shoulder, and our protection could be reestablished. This most probable target, guys, in the current circumstances, if we suggest no impact from the external driving factors, I mean the political something, I would suggest that more probable pullback to the 30%. 1340, 1345, a confidence resistance, weekly pivot point, middle of this nasty bar, and also take a look at this historical resistance will be first lows. So again, support, now it will be the resistance. Here is also resistance, breakout support, so it's natural support resistance area. So what we could say to those of you who would like to take the long trade here, as soon as you will take the long trade, first of all, try to move your stops to the break-even as soon as possible. So when the market will pass, for example, 25 pips, 30 pips, move your stops to the break-even. Or even trade on the hand shoulders patterns that will be formed that will let you to move tight stop. When the market hits the 30%, take a look at the speed, how market will reach it. If it will be very fast, you could hold the position and see what will happen. If it will be gradual and lazy, heavy action, take the half of your profit here, because it is possible that market will stop here and start dropping. So that could be done here if you would like to trade it on the long side. For the bears, currently it's not the point for taking the short position because we don't have any bearish continuation patterns. And to take the trade, it is better to keep an eye on the retracement on the hourly chart. For example, market here could form Gartle's triple two sell pattern. So we could get drop here, kind of the ABCD retracement right of the confluence. That will be the chance to take in the short. That also will be the signal for bulls. If you will have the bearish continuation pattern here, gradual lazy action, probably this will mean that it's better to close the long trade. So that's the two setups that we will keep an eye on coming week. But as I said, this is only the technical side. So any impact from the external factors could change the situation drastically. And But this stands out of our control. We just taken into in our analysis the recent fundamental statistics, data, and technical view, and what we have on the technical we just discussed right now. So let's see what price action euro will show on the coming week.